Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, March 27, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, this is a great time to review exactly what we've been talking about in terms of the big picture on the SPY. Let's just get into the review right now. They're in the uptrend, and within the uptrend, there are very and have been very mild pullbacks that will continue until something changes. It will continue until it's not, similar to the uptrend situation. So therefore, when you look back a few days, you say, hey, look, the market made a top on the 21st, and that wasn't a down day, so it doesn't even count as a pullback day because the day before was a lower close than the close from that particular Thursday on the 21st. So that wasn't even a down day. So down day number one, down day number two, 2-day pullback, 2.5 days. We talked about this many, many times. 1, 2, 2.5, 3-day pullbacks, and they go right back up again. What happened today? They did a retracement of yesterday's decline after the gap higher this morning and finished higher on the day. It was essentially a 2.5 day pullback. The trend is up. The trend is your friend until your shit gets thrown out the window. There were plenty, and I mean plenty of traders between yesterday and this morning who tried to short the tape and were issued a pie in the face. We had traders in the live room that bought late yesterday in the general area of the 518.22. We talked about that last night. That was the breakout area. That's what they went to, or at least almost to, into the end of the day yesterday. Writing on the wall, traders recognized it. They held a position overnight and got summarily paid handsomely today. Any change to the weekly chart? Absolutely not. What have we been talking about this week? Well, it's the end of month, end of quarter. 3-day. This weekend is a 3-day holiday weekend. How often do the markets trade down into a 3-day holiday weekend? Of course it happens. Of course it can happen. It just doesn't happen all that much. Today was an update on bigger volume than the last 2 days trading lower. There was a hint of institutional participation towards the end of the day on that end of day ramp, also known as an end of day jam session. About a quick detour. This is worth the detour. We're talking automagical lazy swing trader algo system. The system has put out shorts. The system has put out longs. We have both. Let's take a look at one of each that were closed out today for profit. Here's a short trade in DraftKings. Entered at 48.16, trade alert. Traders got an email alert. They got a text alert. It was on the watch list ahead of time. They knew the price ahead of time. The alert is confirmation. Everything is laid out ahead of time. There are no surprises intended. First profit today, 46.15. Look at this down candle. This is a nice reversal candle. There's more to come on the downside. The second profit target is lower, but it is now a risk-free, emotionless trade. But wait, there's more. How about a long trade that was closed out today in total? Trade entry alert, 21.83 average price. There was 2 entries. That's smack dab in the middle. The first profit target was 25.70 for a pretty nice base hit. It was more like a stand-up double / 2 runs batted in with that base hit, if you will. Second profit target today, 28.66 or 28.60, pardon me. About a 25% return. Big profits, automagical swing trade algo system. Long trade. We have shorts, we have longs, we have something for everybody, each and every market condition. Each trade and chart is independent of one another. Markets up today, a short trade worked. Markets up today, a long trade worked. Funny how that works. Don't forget Tesla. We're still in this. Took first profit, waiting on second profit in from 164.65 while the analysts were downgrading it. Funny how that works, as a reminder. But wait, there's still more. Live room. How about Lyft today? This was given out in real time. We managed the trade in real time. This is exactly what was happened. This is exactly what was said today. They came close and they bounced away. This is early in the morning. What I said to the traders in the live room that already were looking at 1880 is, hey, look, they took the luster off 1880, but this is still a good zone. Let them now spike it into the zone, maybe halfway home or at the second number, and then you pick it up. What did they do? They came a little more than halfway home and ripped it back up in the other direction. Plenty of participation in the live room in Lyft. We had a bonanza from a stock trading perspective today in the live room. Wait till you see this one. Remember DraftKings? We were short DraftKings from the lazy swing trader. Well, guess what? Live room today in real time. What did we do with this thing? We bought it up at the low. 44.80 to 44.40 was the zone. The low of day was 44.41. It was a very tight range, 40-cent range, narrow range. What did they do? They ripped it back up in the other direction, right back up above the exit on the short. This is all a funny how this works. Not only were we short DraftKings, picked off the low and took a ride up for about $1.50 in 15 minutes in the live room. How you doing? Told you it was a bonanza. Wait, there's more. About CrowdStrike, real time, 318.15. How about a rocket ride back up in the other direction? Live room participation. The bonanza continues. About coin today, live room, real time, 254.45. Hit it, spiked it by a few pennies, and what'd they do? You got it. Ripped it back up in the other direction. The bonanza lives on. Live room today, people are making real money. How about Meta? This one came up short by a penny or so. Then they came in and hit the number. The numbers work. Ripped it back up in the other direction for 88.80. If you're looking at this for the first time, you find this hard to believe. If you've been around a while, you see what's going on. Live room members, you like apples? Yes, everybody loved the apples. About inside the numbers, the commentary, this applies to the live room as well. Pause the video, read the notes, go back to the chart to double check the work. Today, our early pivot, 521.10. Above, and she's bullish for another leg higher. Below, and she's not. She can fall a little bit into what? Into a zone we can purchase for a bounce back in the other direction. There's 521.10. You could see what happened. Opened above it, stayed above it. Once she gave it up, that's the bear pivot. Now we're looking for the market to go lower to purchase it for a bounce back in the other direction. Let's see about that. Remember, pause them, read them, go back to the chart to double check the work. How about down here? Let's zero in on the meat and potatoes. 520.25, give or take, is the first area of support. If below, the door opens for 519.20, that creates a zone. Let's just cut to the chase. So they got below the pivot. We know about that. Let's wipe the pivot off so this becomes clear. This was the buy zone. This was the other end of the zone. This was the buy number, the first one. The other end of the zone. They never got to the other end of the zone. They just leaked. Took almost half the day to get going back in the other direction. But guess what? They never did anything wrong. They gave us the trade. And then into the end of the day, they had a jam session. Any traders that were holding the thing or a piece of the thing got paid handsomely. Let me just reiterate what we've been saying for a couple of days. Live room in these videos. Are they really going to sell off the market into a 3-day holiday weekend, into the end of the quarter, into the end of the month? Really? All this was put on the board before the opening bell. It's all in here. Pause the video, read the notes, go back to the chart, and double check the work. If you're trading in the S&P, the SPY, options on the SPY, the exchange-traded products, anything of the like, the futures, the ES, the MES, if you're even interested in the S&P and trying to trade it, what are you using as your numbers if you're not using this? It's a legitimate question. Where are you getting your information from? Pause them, read them, go back to the chart to double check the work. We had an absolute all-out bonanza today. What's going on over in Camp IWM? Well, they had a nice rip-roaring rocket ride up today, over 2%. They were a little bit of a canary in the coal mine, if you will, this morning. They were positive, up 0.8%, 1%. They were up while the spiders were looking like they were selling off. It never really looks like it, and I explain this in the live room all the time. It appears that it is happening, but that doesn't mean what's going to happen now or what is happening now is going to happen in 2 or 5 or 10 or 15 minutes from now. It's generally not. It's the psychology behind the market, the way Mrs. Market / the alien market people suck you into thinking something's happening, take a position right before they reverse it back in the other direction. That's part of my job, is to hold traders from doing that. It's almost like I'm holding my shoulder against the door and I got a pack of traders trying to bang down the door to go short while the market's going down, telling them, no, you're going to get whipped out. You're going to get a pie in the face each and every time. Once in a blue moon, they won't. Most of the time, they will. My job is to stop you from doing the stupid stuff. When we're in a downtrend, different situation. We're selling the rips as opposed to buying the dips. In an uptrend, you want to buy the dips. You want to trade with the trend rather than fighting the trend. Make sense? You don't need any more variable risk than already exists. Fighting the trend is adding variable risk. The light bulb goes on for some traders. What about the folks down at the transportation department? Up 177 points today, about 1%. Anything wrong here? Absolutely not. Let's go back to our weekly chart. And what do we have? We have our bull box. What's going on in our bull box? They're eating time off the clock, building energy to do what? To work their way higher to test the next place. What's the next place? It's this stuff up here. This pivot area, there's 2 pivot highs from 2 weeks in a row. That's the next place they want to run a test of and potentially get through out of this bull box. Daily chart, same rules apply. Above all the moving averages, the trend is your friend. Some of you say, hey, look, he goes over the same stuff every single day. Well, why? That's because it burns a hole in your head of what's happening each and every day. Every day is a culmination of the last several days moving forward. We take our clues, we take our hints from what the market is doing at face value. When she gets below or above a certain thing, we know she's working on the next thing. If there's a pattern working like a bull box, guess what? We're going to identify it. We're going to remind you. We're going to make sure that everybody's on board, and that one day in the market or 2 days in the market doesn't necessarily change the larger picture of what's going on. It's just the intraday or the daily noise. But when you look at the weekly chart, it clears out the noise. By the way, live room members nailed this one too. We had the support number. They hit it, they turned around, went back in the other direction. Some traders would have used IYT rather than DJT. Just saying. What about the Q people? Anything interesting going on here? Not really. They tried to touch the 20-period moving average on the daily chart, didn't even get there, went back in the other direction. Finished up about 1/4 or 1/3 of 1%. Not really a big move today. Little bit of a laggard against the SPY. We'll keep our eye on it. They're above all the moving averages. So technically speaking, nothing really happened, and we're going to leave it at that. Just take it at face value. We're not going to read into it. Not just yet. Not until the market gives us a reason to. What about the financials? XLF, uptrend. If there's nothing wrong with the financials structurally, there's likely nothing wrong with the overall structure, overall health of the overall marketplace. The financials are a tremendous part of everything, and therefore, if there's no cracks in the armor of the financials, it's unlikely the rest of the market's going to start unraveling. If the financials start to unravel, that's a different kind of flare up in the air. Right now, the financials are strong, remaining in an uptrend. We can move it along. What about this little tech sector canary in the coal mine, SMH, or Smash Mouth as I like to call them, the Philadelphia Semiconductor Index proxy? So what are they doing here? We talked about it last night. They could be making a bull flag, as long as they're above the 20-period and all the other moving averages for that matter. Could be a bull flag, and we can draw it from the low like this. So technically speaking, this is a flaggish kind of formation, building energy to move higher. But with the rest of the market up today, and this was flat, down 8 cents, really flat line, it's interesting. It's worth watching. It's a good canary in the coal mine for the tech space as a whole. If the semis are not participating, we're going to watch it with one eye. If the semis are starting to decline, it's a canary in the coal mine-ish situation, and we're going to watch it very closely for markets that could be rolling over, topping out, finding resistance anywhere in there. The semis are really important. If it's a one-day wonder and they're just not up with the market, that's fine. Come below the 20-period moving average and stick below this gap, then we're going to look at it more closely. And by the way, can't tell by just looking at it on the video, but they did not fill this gap. So that's unfinished business. Why didn't they fill the gap? Well, we don't know Mrs. Market's reason, but what we can say is for now, that's bullish, but also we have to beware of the trick, trap, fool, and frustrate crew coming back to fill the gap and going lower in a fake out operation. It's by choice. She didn't fill the gap today. Came up about 20 cents or 15 cents short today, somewhere in there. That's a choice. There's no phenomenon. It's a choice that will be reconciled later. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.